Hello guys, welcome to the Trading Parrots. Surprise, surprise! Some whales were holding tens of thousands of Bitcoin and starting dumping on the market. And as a consequence of that, now the heavy support of 115k is being tested as I speak. In today's video, we're gonna focus on what could be the potential downside if this move down starts to escalate. And remember that we still have in play the potential liquidity hunt, a bear trap as well. We're gonna analyze whether that is the best way to observe the market or not. Many indicators under the carpet are showing huge signals that I want you to be aware of before you start trading the day. Hit the like, write down a comment down below. That really helps the channel if you like this type of content. And yes guys, my thumbnails are always gonna show what is the new thing that is going on, the thing that people are talking about. If you wanna know what I'm really thinking, what I'm really trading, I never thought I have to say this, but watch the video. I literally have some people complaining that I am taking a long with this video. If they just watch the first 10 minutes of the video, they will know that I am in a short, and I have been in a short for a long time. And since the past 4 days, despite the fact that the thumbnail changes every day, we've been talking about a scenario number one, which is currently 100% in play. We'll talk about that. If you're a hardcore fan of the channel and you're doing well, I see your comments every day. There's a black and white between the people that actually watch the video and spend the time to understand it, the people that are here to learn, versus the people that are here just to trade the thumbnail, getting wrecked. I feel sorry for them. And yes, Martin is saying that volatility is coming, the price is dropping and the open interest is climbing. And that is very dramatic when we look at the aggregated open interest against all the exchanges versus what the price is doing. You can see that we have a huge divergence. The price is coming down, hitting the lows of 115, whereas the open interest is hitting all-time highs. And remember, open interest can be shorts, can be longs. The amount of longs is growing exponential in this range. We're gonna see as well what the shorts are doing, which is definitely putting them into big risk at the moment. So don't be that dude that starts shorting from the lows, because you're gonna get wrecked. Bitcoin slides to 115k as range breaks lower, and according to this article, it says that it's signaling deeper pullback probabilities. We got a moderate bullish 6 out of 10. Well spends $23.6 million on bullish BTC options, betting for 140 to 200k by the year end. Large public bullish option structures lift sentiment and highlight still elevated derivatives open interest near records. Potential fear for volatile upside squeezes. To me, the more people are betting on these things, the less likely it is to happen, at least in the way that they are expecting it. And we got barely a 7 out of 10 today, not a single 8 or 9. Bitcoin and Ethereum ETFs record 458 million net inflows. Bitcoin share is 226 million. Fresh spot ETF demand directly sucks up BTC supply, reversing the short bout of outflows earlier in the week and supporting price dips. So yes, I noticed this morning that we have some inflows, and it's almost about to completely reverse the effect of the 3 days in the negative, as you can see, but that happened yesterday right after the dip. So I wonder what they're gonna do, if they're gonna continue buying the dip, or if there's gonna be some additional panic coming in and maybe potentially some new outflows in the red again. Let's see how we close on Ethereum, and Ethereum continues to be intact, just positive inflows day by day, even yesterday. This article to me sounds a little bit too exaggerated. It says that Bitcoin tumbles below 116 in a bloodbath for crypto longs. I definitely disagree. That is not even close to a bloodbath, guys. Let's have a look at the liquidations in the past 24 hours. We got coming in 500 million. That is cute, guys. It's nothing. Yes, we are starting to see the flip into the longs being liquidated. We covered this specific chart so many times in the channel. In one of the recent videos, I show you how we reach the lowest level in the negative of shorts being liquidated. We reached 26%, which is the largest level right after the beginning of the bull market, where we reach around minus 24. So 2% additional the oscillator reach. And once you get so overextended in a period of shorts being liquidated, there is a sharp move back into liquidating longs. For example, in this period in here, right after the price goes from 15K into 25K, then you start getting one correction, still with a higher high, and then you go back down into 20K, liquidating massively the longs before shooting back up. And that brings back this period of longs primarily being liquidated. You can see other examples across the whole cycle, but at least if you observe just the oscillator and you see how extreme is that move, and you focus on the other extreme moves that reach minus 20 or around these areas of minus 16, you can see that then later longs get their fair amount of love as well. It's not gonna be only longs, of course, but the big peaks could be primarily longs for a period. Many people long the alts after they saw Ethereum pumping hard, so market makers dumped and liquidated the late longs. And that's why I continuously insist that you need to build a position at the lows where it hurts. And then once you have that cute position and you take care of it by looking at the breakout healthiness, you don't use the breakout to start trading. And way worse, you don't chase the price once it's pumping just because people are saying that it looks healthy. At that point, you have to be holding a position that was built deep in the uncertainty, in the fear area. Bitcoin price dives to 2-week low as Galaxy Digital offloads 1.5 billion in BTC. That's what the headline says, but then after you read the article, they say that is apparently that's the case. So we don't know really who is selling. They say that due to the proportions of the pullback, most likely it is to do with them. And they're talking specifically about these early miners that accumulated tens of Bitcoin, and some of them are apparently selling in Galaxy Digital. So it's Friday, and as usual, we get a reading of the Federal Reserve balance sheet, and we got a negative reading this Friday, guys. So we moved down from 3.4 trillion into 3.36. It's a small fractional amount, so we really cannot say anything. Like, we cannot say that the breakout to the upside is looking really bullish, neither we can say that we broke anything in the structure, so there is no directional bias yet from this. We monitor the Federal Reserve because whatever they do is usually the smart way of doing it, and general markets typically follow this as a leading indicator to unload and offload risk off, risk on assets. And guys, this amount of open interest can be interpreted in two ways. So either there is a ton of shorts that enter with this open interest, and that's gonna help the price to recover because market maker will chase them, or this is a heck of a huge amount of longs that could make the correction slightly deeper. Spoiler, we got tons of longs coming in, so that is not the ultimate conclusion. So the takeaway is not, okay, longs are gonna get definitely liquidated, but keep an eye for potential deeper correction. We'll look into technical targets. They are deeper than where we are, but we will also defend the thesis of the liquidity hand and the bear trap. Let's look at CME. We got new developments. Yesterday, the dump started precisely from the area where we had the top CME gap. That level that everybody was saying, yeah, it's not worth looking at $100 CME gap. You can see that right before finishing with the day at around 4 p.m. UK time, we hit that level and we did nothing apart from dumping after closing the gap. So it's very difficult to swallow the idea that we didn't go there to close the CME gap, right? That's the last thing we did. We got a strong rejection from there. We never touched it again. We filled that liquidity and we went back home. As we were coming back down, you can notice that we left a new CME gap. So now this one is gonna take the name of CME gap 1 and is located above the price. This level going back into 120 could be the perfect recipe now for the thesis of this being a liquidity hunt. If we reclaim levels of support of 117, the fair value gaps that are gonna be located in here could make very easy for this to go back to that level. Okay, so let's park that idea. That is one alternative. We are still halfway consuming the larger CME gap in here that is almost 2K. We have done probably 1/3 of that. There is still 1.1K left of CME gap to take. We don't have to fully consume it, okay? Don't go here. Don't be that silly guy that enters on a short right in the beginning of the CME gap and takes for granted that we will close it today and we can go 125x to close the remaining bit, because that's like flipping a coin. It might not happen. If instead of that, if you were so convinced that we were gonna take this, the right position to do it is to take it from high, take the short from the high. As you come down, move the stop loss to break even, and if you don't consume the whole thing, you go home still with some profits. Whereas if you enter from here and you go into 120, you are deep in the shit, particularly if you are doing that with a large proportion of your portfolio and with high leverage. I think there is a good chance that we complete the CME level in here, in which case I'm gonna start building along. My Patreon members already know the detail of that. I sent an article this morning, both with an update on what I'm doing with my short and what I'm doing with my long. And of course, I'm gonna share everything publicly so you're fully informed, but my Patreon members get informed first and they get the email straight into their account. So below 115K, I start being in profit in my short. That is my current average. But within the CME gap, I am interested to hold along as well. And I know that's gonna be extremely confusing for the people in the channel. Not for everybody. Some people are really advanced traders and I love them. But the vast majority of the views comes from people that wouldn't understand that I'm saying I'm doing a long and a short at the same time. So are you bullish or are you bearish? It's gonna be difficult to explain, but pretty much I am building along as we go lower, and I protect my profits from my short as well. If we come back bullish, I get stop out in profit in the short and I start holding the long and locking in the profits from the long too. Basically making profits in both directions, if that makes sense. So let's look at the update in the Bitcoin status. You can see that we have the breakdown on the 4-hour. The CPR second resistance is not holding. We are starting to consume the fair value gaps. The revenge rally scenario number 1 that we've been focusing in every single video in the past 3 days, it is fully confirmed and now is in the period of the acceleration. And being in the acceleration means that you are way too late to enter on a short. If you do, you can, but with a small amount, and be prepared for the push back up to close fair value gaps, the CME gap that we have on the top, and overall the trend is still strong on the weekly. So careful. Any short that you're doing, you're counter trading, so you cannot scale it up too aggressively or you can get wrecked very quickly. Right, so we are on the 4-hour breaking down the global support. We have done tons of breakdowns. This has been an area very noisy, and that's why, despite the fact that we broke out to the upside, I told you that we are gonna step into the daily time frame and we're gonna hand over the responsibility of our bias to the daily, because the 4-hour has been completely utterly rubbish. I've heard that from a British friend and I like how it sounds, but it doesn't really work with me, does it? Let me know in the comments if that is also your preferred way of swearing in British. Be careful with getting banned, because YouTube is banning accounts when they swear. I've been there. Not banned, but I've been told by the YouTube system, next time that you swear, we might close down your account. So, technical targets. We need to acknowledge the technical targets. Technical targets are not here for us to say, oh, I'm gonna blindly follow that target. We don't do that. We use the technical targets as a data point to be informed, to understand what's on the table, right? To look at the menu. When you get the menu in the restaurant, you look at every single thing, but then you look at the prices in the menu and then you decide, well, this doesn't make any sense. They're charging 50 quid for a stupid burger burger, you know, the guy that throws the salt and stuff like that, I will never pay that damn price, no matter how much golden paper they put outside. That doesn't make any sense either. I grew up in a country like Argentina, where despite the fact that the steak comes with dust and soil from the ground because it fell to the ground before they put it in my plate, it's still the best steak in the world. Sorry, period. Maybe the American one, yeah, or maybe the Australian one, but the rest of the steaks in the world are just nonsense. So we are in here in the area of the liquidity hand. The scenario of the liquidity hand against the neckline can still play out. We go into this fair value gap, the story repeats. We take that, we hold as support the neckline, and we go back into the roof and to hit the liquidation levels over 125k. So watch out for that late short, manage your risk of the re-entry. And if we get a rejection from the neckline, we could see a little bit more of the technical target, if not all of it, if not more than that. The technical target is around 110, 111. We also have around this area the top of the range on the daily, the anchor VWAPs. There's tons of liquidity to be considered as motivation to go that low, but we cannot take it for granted. We have two fair value gaps making the move down. If support gives up, it's gonna be very quick and painless, guys, because those two fair value gaps makes this area very oily, ready to fry some eggs, and they're not gonna stick to the pan. They're gonna just literally slip down into my plate. We have had a big increase in the volume, and if the volume continues in this direction and we stick below the price for too long, that might confirm the breakdown in a way. After all, we already have a 4-hour settled candle way deep. This is way more intense than these mini pinches of the support that were hinting towards a breakdown, but they were faking out and coming back up. This one, guys, is not just a subtle message. This is a huge stab in the back. So just something to consider from the 4-hour time frame. Remember, I was saying that the risk for the longs in this area was to complete the double top with the neckline and the targets of 110. So far, we haven't gone yet into the next level of support, which is 112,400 on the CPR. And if you've been actually watching the videos, which is something that not many people do, we've been talking about this orange line every day, and we've been saying that I have a preference for the scenario 1, because that's the most likely scenario after you break down multiple days the support. So you have a rally, you break down, and I say I'm in favor to go for a revenge rally. We did the revenge rally, we formed the pivot, we observe if we put a lower low. We did put a lower low, and right after that, what did happen? Puke, okay? We didn't defend the immediate move down. We didn't say we're gonna go down from 62 straight into 50. We say first we need to do a revenge rally and rejection. We waited patiently for that, and we did it. Did we reclaim the orange? No, we didn't go for scenario number 2, neither scenario number 3. 1 was the one that ended up playing out. Now, 42 is on the table, is on the menu. That doesn't mean that market maker is necessarily gonna order that dish, but it's available, so it could get consumed by them, but you know, we could close way higher and then do another rally into revenge and continue, not revenge, into resistance at this point. Revenge is the orange line, the white line is resistance. So we could continue in the channel for a little bit longer. I didn't pay attention, unfortunately, but on Wednesday we put a bearish cross on the MACD. I wish I saw this. It would have given me another data point, but it doesn't matter. I still held to my short and it's still open, and I'm still looking to manage it based on the risks that we have in here with an uptrend on the weekly time frame. Depending on how we close the daily, we could settle the double top. This is intra-candle action, and the scenario of the liquidity hand, the bear trap, can buy up all this candle all the way to the top and still go into 125 in the same day, intra-candle. So don't look at the red candle and say, well, I take for granted it's gonna stay there, so that is a confirmed breakdown on the daily, because it's not yet. On the trading range, remember the top of the range after the breakout over 108 8, it's at 108. We have the anchor VWAP at 110, and we have the RSI of 42 now at 111, and we have the technical target at 110,500. So all of them are grouped around this area together with the bullish order block in there. So there's a lot of confluence around 110 that makes it very attractive. That doesn't settle or guarantee the target, but it makes it a lot more attractive than if we only have one single point of interest. Both the market cycle sell signal on the weekly that is already settled is starting to look a little bit nicer next to this red candle at the moment, together with the RSI stochastic bear cross that could settle if we continue in this direction by the end of this week. Fridays are usually the day where things can revert. I've seen so many times that we land on a Friday on a bearish state like this, and then suddenly general markets do something magnificent on a Friday, options expiring and stuff like that, and everything makes a U-turn and we get a pump on a Friday. That could be the case if we go for the scenario of the liquidity hand bear trap. Now, if we look at leverage squeeze, you can see that we are coming very close to the PNR, and after we came very close during the dump, the longs went all in here, back to 79. They are defending this level, and that can be both something really positive. If they manage, they can really drive what is needed for the liquidity hand scenario. But if market maker wants to continue selling that amount of Bitcoin, that can really put in trouble those longs. And I'm gonna show you in Market Monkey Terminal how. Yesterday we had the buy signal on the hash rate, and we did a discussion about the hash rate coming up, but we spot conveniently for us that there were still deposits of very large holders coming into exchanges. And I speculate that if they're still depositing and they manage to increase the hash rate, that means that they manage to pay the bills. Who? The miners. The miners are paying the bills, so the infrastructure for Bitcoin network can continue having a decent amount of hash rate. But how did they do that if they're struggling with the bills and everything? Well, by selling Bitcoin. And if they continue to deposit, that means that they are still needing to sell a little bit more to be able to pay the bills. Remember that we are in a cycle where retail is not moving the network, so the network is not really paying off what it should during a bull market, and that is thanks to your shiny new ETF spot and all the institutional adoption that is basically making it extremely attractive for speculating, but at the same time undermining the healthiness of the Bitcoin network. If we ended the bull market today, hypothetically speaking, those miners are screwed because they didn't make any money during the full bull market. They made money, but a fraction of what they did in the previous cycle, because no one is moving anything in the network. Everybody is operating with only derivatives. So that is something to keep in mind, and in my opinion is a reason why to still be concerned. If I saw this buy signal and no further deposits from large holders and movements of all miner wallets that never needed to move, but suddenly they need to move, well, that's concerning to me. It's an area that is shouting, I need to distribute to pay the bills because I'm really not making money out of this crappy network that no one wants to use. And even during this rally, spot is not dominant. We have a single day, which was the 18, where we were spot dominant. The previous rallies were all spot dominant, and there has been a flip. People are migrating their holdings from spot into derivatives, and the more they do that, the miners have less incentive to continue to keep the hash rate up and to continue to operate really. Those distributions were spot yesterday. In the video around here, we had 32,000 on Tuesday, and you can see how it's climbing up the big well explorer. That is my preferred way to spot distributions that could hit the market potentially. Since we are moving down, let's have a look at the short-term holder realized price. It's always good to know where it is located, and it is now at 104k. So if short-term holders enter panic mode for some reason during August or July, which is typically where they do that, 104 could be a magnet to consider. And the short-term liquidity has been hit. At least half of it is now gone up until 115. Around 114, 161 we have the last bit of liquidity. That is one of the levels that I mentioned to my Patreon as I'm interested on buying. If we get there, I don't chase price. I wait for price to come to Papa. If price doesn't come to Papa, Papa waits. Patience, guys, in trading is one of the most important pillars. If you cannot master waiting a little bit, you're better off doing something else. But to be fully honest, it's really worth developing your patience. I do not have really great patience in life. I'm very accelerated person. I want to see results immediately. And it took me a long time to master developing specifically patience for trading because it's a must. You cannot bypass that. You're going to find yourself so many times wanting to just, fuck it, I'm gonna just buy. And then you end up regretting it. Always identify what's the golden area I see now in the market for an entry and wait there. If price doesn't go there, there's plenty of other alternatives. Always look for the golden entry. And by the way, for those of you that are new to the channel, this is a small order, okay? I scale up my order. So my initial order is 114. Remember that there is a technical target and there is a potential for further corrections. So if we do that, you need to be prepared for that as well. When I say golden, I don't mean all my capital at 125x. Never. I'm very conservative. And we are leaving behind the pocket number 2. I still think that in 2025 we are gonna hit it, and we could hit it as soon as we confirm that the liquidity hunt scenario is in play, in which case I'm not gonna be able to enter my long. Do I care? No, because I'm holding spot as well. So my short that I'm currently holding is already hedging with the longs that I am doing with my spot. That's why I'm so laid back with my short position. There is no way I can get liquidated, literally. And yes, that big bucket that we saw yesterday, we flag it as the largest liquidity pool of the past 30 days, has now completely been gone. There are 2 new levels that are still the largest, but these are new levels. They are located at 114.6. And I'm gonna show you in the order book what they're doing, these bastards. The 107, of course, is still there. And on the top end, there is that potential to go into 120, although it's not that big, but there is this level in here that partially overlaps with the new CME gap that we have on top. Let's start looking into the order book. What's going on in here? Magnificent. You saw all these days how the purple whales were very interested in leading all the move up. Then we started the period of the rolling over. Remember the videos. We say, yes, they have led this up. They're still pointing up. But at this point, we are in a rollover move. That calls for a slowdown in how aggressive is their CBD. And I'm talking about 100K to 1 million. And that meant that they were really still holding, but eventually they end up closing sharply all the longs in one go, going back into shorting. At that point, you see the full flip, and they even take the previous low that is in here. They went all in the short, and now they are pointing down. And who is buying the dip at the moment? The purple whales? No. The brown whales? No. The green ones and the orange ones. So if you are buying at this point, you're buying together with positions that are aggressive buyers holding positions of sizes of 100 into 10K maximum. So you're trading with retail, you're buying the dip with retail. Are large whales buying this dip? Well, apparently not, at least according to FAR charts. We'll see. And where is the resistance? We need to look into that. We have 65 million at 120, 54 at 125 more or less, and 40 at 130. Support is at 113.9 with 43 million at the moment. Let's confirm that. Let's look into monkey market, monkey terminal, and we still have like around 2K holding 115. So I increased this chart into 1 minute to see what's going on. I want to see the impact, the moment of the impact, and you can see the price coming back down. They were still holding strong that 2K. It stayed there. It never impact, but they put some 1,000 right before the impact. This is the 1 minute chart. So for 5 minutes, they held with 1K and they managed to push the price with a dead cat bounce in here. But then eventually the price still hit the 2K. At the moment of the impact, I will say that the liquidity was there. You can see the central block is 2.23 that got filled, probably the vast majority, and right after the next candle is 483 left. So I will say that a good chunk was filled, and that was responsible for pushing the price into 116. Still, the weakness and the profit taking took the price back down, and eventually it hit a low of 114.7, and you can see that that support is still back. It's very persistent in holding the price above 115. They filled the orders in here, but they still have some fuel to keep the price holding right there. And I think these are traders that are looking really to get to hurt the shorts that are shorting this area, the late shorts. You can see how big is the support at close proximity of the price. We are a percentile of 100. So the biggest support in the past 2 weeks is in play at 1% and at 2% away from the price, according to the statistics. And another alpha is that at these low levels, we are seeing an average of over 15x on the shorts. So top traders with 15x are trading this range in here. And as you can see, price goes against them. At this high, it still went up. So watch out with going up from here, because when the leverage, the average of them hits over 15x, I draw red there, because too much leverage usually gets you wrecked. Now you can see how the longs are spiking in here, just like leverage squeeze has shown us. From lows of 29, we are now at 57. We need to watch out for this going very high. When we reach levels of over 70 in the longs, we usually get a strong bounce up. That's not the only way we can go up, by the way, but if this becomes a very sharp decline, I will expect the longs to step up into 70, and at that point, together with slippage, we can spot a really sweet golden entry as well. Let's see how we are hitting the close proximity liquidity. There's still a little bit of downside to be had based on liquidity, but now the shorts are in big risk relative to the longs. Of course, we have 363 delta. It's not the biggest ever, but it's much more than we have had in the recent weeks. I also want to see what positions are opening in this area. The largest position opened at around 117 and probably now is underwater with the price in here slightly coming back up. Those are the people that probably were filling those orders that we were seeing in Market Monkey Terminal. And I'm expecting the price to clear some imbalances in here. That's a high likelihood scenario in my opinion. We have the fair value gaps spanning now into 118. We have consumed partially the fat fair value gap. So now it's an arm wrestling between carry on straight down or clear part of the fair value gap. So for the short, for the bearish scenario, in my opinion, what we have to do is to consume just a little bit of the green and then see a strong rejection from there and continuation to consume the lower fair value gap. I wouldn't like to see the price to go as high as 118, 200 back into the median, because that is going to turn this into a bullish pattern, into a falling wedge like this, which could propel the price back into 125. That is the recipe to still get a bull flag in play. Now, if we break this support now and we start accelerating, obviously we destroy that pattern and we start bringing in new patterns, possibly one that is more bearish. And yesterday, the general markets actually closed in the positive, at least when it comes to big tech. The rest of the S&P not as good. Let's have a quick look. Dollar is now seeing a potential rejection from the breakout. You can see how it's been sold from 3-4. Once again, we get these wicks to the downside, and the VIX continues now to decrease into an area of safety instead of the area of the expansion that could bring back the markets. It's a very interesting combination. We get higher highs on the Nasdaq and the S&P with a positive pre-market price reading at the moment, just 1 point, but in the positive. So with this correction that we're getting in Bitcoin, that is decoupling from what's going on really in general markets. By seeing the gold coming down and the general markets up and the VIX as well down, that means that things are okay and that we should be bullish. So maybe the sell-off is attributed to these large sellings that are coming from Bitcoin specifically. I'm gonna do a quick wrap up, but before that, let me remind you that you can open an account on 2bit and get $50 straight away in your account as soon as you sign up. That's even before depositing, so that's free $50 to trade. You can decide whether you want or not to do KYC anywhere in the world. Use leverage and get access to over 1,000 trading pairs. This was created by the same people as Bybit, so if you have used Bybit before, you're gonna just feel like home. By trading on 2bit, you are definitely supporting the channel. All the income that comes from this goes straight into salaries of my team, so I really appreciate the help. It's a win-win. I get a better team, you get better content, and I get to focus on the charts and find better patterns. So my wrap up is that we have a substantial breakdown on the 4-hour. This could be it. We could get now a revenge rally into the lost support, fill some fair value gaps on the upside. Watch out if you are gonna take a short. Do not take a short from the very lows. Look for areas of weakness, some resistance or something that gives you some edge. I am in a short and I'm looking forward to see if we are not necessarily gonna have that liquidity hand bear trap scenario, so I can be back in profit, in which case, as I say, I'm gonna start trailing and locking in some profits while at the same time looking for longs with that look into bucket number 2. So you wonder why you didn't enter along within this range, because I entered my longs at strong levels of support, levels of interest, and we were just ranging and flicking between being slightly above 118 or slightly below, and I do not like entering longs in the middle of the range. I like extremes and data-driven decisions. If you wonder if I know that something is gonna happen, the big answer, and short and simple, is no. I don't know if we're gonna fill the gap on the lower end first or on the upper end first. Do you think it's gonna continue dragging down? I don't know. Do you think we're gonna hit 2 tomorrow, yesterday, in a month, in 2 months? I have no damn clue. Do I need to know is the answer, is the question that you should be asking yourself. Do I need to know those things to make money? Absolutely not. And you don't need either to know anything. You just need to know probabilities. Is it high likely that we're gonna hit 2? It is high likely, it is not guaranteed. So does that mean that if we don't go into 2, you're gonna get wrecked? No, because I build my long at an area that is high likely to bounce up. Will that bounce necessarily into 2? I don't know, but it bounces. And once it bounces, I lock in my profit and I lay back and I wait, eat some popcorn and see if we get into 2 or not. If we don't get into 2, I make some small profits. If we get into 2, I make big profits, but I don't lose. That's the key. Well, I hope that helps in any way for you to step up your game and to stop chasing certainties and to start instead focusing on probabilities, high likely plays, setups, because that is ultimately what's gonna make you sustainable income as a trader. Thanks so much for watching. I'll see you in the next one. Bye bye.